Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Working a provision for doubtful debts question seems to be a challenge for candidates. So before I move into another topic for y'all, I'll just look at another work example of a provision for doubtful debts question. This time it's a CSEC past paper question. You may, if you're wondering what is provision for doubtful debts, there is a session that was done on this. The link will be in the description, as well as a link to the accounting entries for provision for doubtful debts. And you need to remember that a provision for doubtful debts account is the same thing as provision for bad debts. So let's go into looking at that question. This question is taken from 2003 past paper question. That's the May 2003 CSEC, number 3B. And let's get into it. On January 1st, 2004, the S&S company had $7,500 balance in its provision for bad debts account. The company's policy is to provide 5% of debtors as bad debts provision. So we're seeing where the company applies 5% of debtors as provision for bad debts for each year. The company's year ended December 31st, and you're presented with 3 years. The first year, 2004, $180,000, that's your debtors balance. For 2005, we're seeing that debtors balance is $135,000, while for 2006, debtors balance is $145,000. And your debtors balance is important as it relates to a provision for doubtful debts question. What you're required to do is to prepare a provisions for bad debts account and balance sheet extract for the 3 years. Now, before you do any question, if you notice, the first thing that I've done is to read through the question, because once you're working an exam, you're preparing your responses. You can't just look at a question and say, oh, I know this question. And the thing is, once you know this question, you know the topic, you're just going to jump and you're going to just get right into it. But you need to read the question and pick up all the necessary details required for the question, as well as look at what you're asked to do, because you may be wasting time responding to something that you are not asked to do. Like, for example, the question could have asked you to prepare the profit and loss extract. This question did not ask you to do that. So you might find that if you did not read what is required, you might end up doing the profit and loss extract when it is not required. You're wasting time. This time could be used in completing another question. Now, the next thing is that once you have read the question, if it is that you need to do any workings, like for this question, you have to do your workings. It means that you have to do your workings first, and then you proceed to preparing the necessary accounts. Now, what is important to this question is that there is an opening balance of $7,500. So there is an opening balance in this account of $7,500. So you need to bear that in mind. So this 7,500 is the opening balance in the account. Now, you may be wondering why I am stressing this 7,500 as the opening balance. You need to ensure that this information is presented in your workings. So the first thing that we're going to do for 2004 is to put in our balance. So there is a balance brought down, which is coming from the previous period of 7,500. Now, that is very important to you. And once you're doing the account, the provision for bad debts account, you need to enter that balance. But you may be wondering if you're going to debit or credit this. You need to remember that the provision for bad debts account carries a credit balance. So therefore, that will be credited to your provision for doubtful debts account. So that information is very important. Now, in continuing for 2004, we notice that at the end of the period, debtors balance is 180,000. We now need to ascertain what is the balance that would be reflected in your provision for doubtful debts account for 2004. So we pick up the $180,000. We multiply that by the rate of the provision, which is 5%. And in calculating that, so that's $180,000 times 5%, and that gives you a result of $9,000. Now, what is the value that you're going to put in your profit and loss account? Remember, because there was a previous balance, the provision for doubtful debts account already existed. There is a balance in that account. For the current year, which is 2004, you're only going to show an increase, the increase or the decrease in that. In ascertaining whether there is an increase or decrease, you have to look at the previous balance, which is 7,500, compare it to the balance at the end of 2004, which is 9,000. In comparing that, you would notice that there is an increase of the difference between the 7,500 and the 9,000, which is $1,500. That's $1,500. Now, what are we going to do with this increase? Where there's an increase in your provision for doubtful debts, that will be a credit entry in your provision for doubtful debts account. So remember, the increase is credited to your provision for doubtful debts account. Now we're going to look at the year 2005, and we need to ascertain what is the balance in our provisions account for 2005. Our debtors value is 135,000. The rate for the provision remains at 5%. So we're calculating 5% of that. What is the value in our provisions account for 2005? And that's 135,000 times the rate of 5%, and that gives us $6,750 as our provision balance for 2005. Now, the next thing is that you're going to determine if there is an increase or decrease in the provisions account. This period, it is $6,750. However, in the previous period, it was $9,000. Because this year is lower than the previous year, there is a reduction, so there's a decrease. But what is the value that it decreases by? You find the difference between the 9,000 and the $6,750, and that gives us a difference of $2,250. So that is the amount that will be recorded in the profit and loss account for 2005. Now, because there is a reduction, we are going to debit our provision for doubtful debts account. So our provision for doubtful debts account will be debited while our profit and loss account is credited. on to the last year, 2006. So we're on to the final year, 2006. Now for 2006, our debtors value is 145,000. We multiply that by the rate of 5%, which is the provision rate, and we get a value of, so that's 145,000 times the rate of 5%, and that gives us $7,250. $7,250. Now, we need to make our comparison. While we're making this comparison, we want to know if there's an increase in this year or a reduction. Last year, it was $6,750, which is 2005. This year, we're seeing that there's an increase because it moved up to $7,250. But what is the amount it increases by? That's the $7,250 minus $6,750. And that gives us an increase of $500. Now, when there is an increase in the provision for doubtful debts, remember, this amount is credited to our provision for doubtful debts account, while our profit and loss is debited. So that is our workings based on the question given for each year for the profit, not a profit and loss, but the provision for doubtful debts balance for the different periods. So now that we have our workings, we're able to prepare our provision for bad debts account, which we were asked to prepare. So once you're doing the question, you're preparing your account. So this is provision for bad debts account. Once you're preparing the account, you look at your workings because it's the information from your workings that you're presenting in your provision for bad debts account. So the first year that we're starting with is 2004, but there's an opening balance as presented in the question at January 1st. So therefore we need to record that first. So our balance brought down is $7,500. Now, at the end of 2004, our provision increased by $1,500. And as indicated in our workings, which we have indicated whether we're going to debit or credit the provisions account, it's a credit entry because there is an increase. And once your provision for doubtful debts increase, remember, this is an expense. So your profit and loss account would be debited. So that is December 31st. And our details is profit and loss. That's the other item affected. And the value that we're recording is $1,500. Now, there is no other entry for 2004. So therefore, we're going to proceed to balance off the account. So that's December 31st. Details, balance carried down because we're balancing off the account. We want both sides to be the same. And on our credit side, we're seeing a total of $9,000. The debit side, there is nothing. So our difference there is 9,000, which is our balance carried down. Enter your totals. Don't forget to enter those. And those must be on the same level. And do remember your totals, single line above and double line below. Okay. Now to complete our balancing of process and in indicating the balance that is coming out of 2004, January 2005, that's January 1, 2005, balance brought down, and that's the same thing as your carried down, which is $9,000. So we're seeing that the balance for 2004 is 9,000. Now we're into 2005. And if you look at your workings, you're seeing where there is a reduction of 2,250. And because of that, our provision account should be debited. And once there's a reduction in your provision for bad debts, remember this is a revenue. So your profit and loss account will be credited. So the year is 2005. Our date, December 31st. Our details, profit and loss, don't forget. That's the other item affected. And our value that we're recording is only the reduction, which is $2,250. We're now going to proceed to balance off. On the credit side, we're seeing 9,000. And on the debit, we have $2,250 as it relates to this period. So the difference between those two will be our balance carried down. And what is the difference? Our difference is $6,750. And remember, this is the very same figure that you got by calculating the provision for doubtful debts balance. And remember, that was the debtor's value times the rate. So let's proceed to put in our balance brought down at the beginning of 2006. And basically what you're doing is completing your balancing off process. So that is January 1st, 2006. Our details is balance brought down, and the amount is the same thing as your carried down, which is $2,750. Also, remember, you can double check if your provision for doubtful debts account is indeed accurate, because your balance brought down figures should reflect those figures that you got for your working. So we're seeing for 2004, our calculation was $9,000. And in our provision for bad debts account, we're seeing that the balance brought down coming out of 2004 is 9,000. For 2005, our workings is $6,750. And definitely in our provisions for bad debts account, we're seeing that the balance brought down is $6,750. So remember, you can use your workings to double check. Now, let's complete the provision for bad debts account. And that is the record for the final year, which is $7,250 for the provision balance. For 2006, that is. We notice that there's an increase of $500. So because that's an increase, we're going to credit our provision for bad debts account. So that's December 31st, details, profit and loss, because our profit and loss account is the other item affected, and our profit and loss account will be debited because once there is an increase in the provision for bad debts account or the provision for doubtful debts, the very same thing. The provision, therefore, is an expense. We're only recording the valid increases by, and that is $500. Now at the end, we're going to balance off, that's 2006, December 31st. Our details is balance carried down and the amount is 7,250. Our final thing before the brought down is to enter your totals, which is 7,250, 7,250. That is our total. And our final step there is to enter our balance brought down, showing the balance coming out of 2006, so that is January 1st, details, balance brought down, and the amount is the same thing as your carry down, which is $7,250. So there we are with the provision for bad debts account, and you can double check. Don't forget that you can double check your account to see if you're indeed accurate. Remember, the balance brought down should be the very same as the value that you have calculated in your workings. So the 9,000 is your balance brought down coming out of 2004. 6,750 is the balance brought down coming out of 2005, while for 2006, your balance brought down is $7,250. So these are the balances that you're working with. So your provision balances are there, while your debtors balances are coming from the question. So now that you have that and you were asked to do the balance sheet extract, we can then proceed to completing that. So let's go. We're preparing the balance sheet for S and S company. The information is right here. The name of the business, which is S&S Company. And you must indicate what you're preparing, which is the balance sheet. And that is as at 31st of December. We're not going to enter the date, the year right there, because we're working with 3 different years and we want to capture all of that. Now, provision for bad debt is linked to your debtors, and because of that, you have to show that in your balance sheet. You're doing the extract. You're basically showing how you would treat this item in your balance sheet. So you enter the category, which is current assets. And we pick up the first year, which is 2004. The item that we are entering is debtors. And the debtors value for 2004 is $180,000. Remember, this is taken from the question, 180,000. From that, we less provision for bad debts. And the provision for bad debts, you can either take this from the question, which is the value after your equal sign, or you can go to your provision for bad debts account and pick up that value. Out of 2004, we're seeing that there is a debtors, not debtors, but our provision for bad debt value of 9,000. That is what we're going to subtract from our debtors. 180,000 minus the 9,000 give us a result of $171,000. So that is for 2004. We can then do 2005. So remember, you pick up your debtors value. For 2005, we're seeing that our debtors value is 135,000. So debtors, the value is 135,000. From that, we're going to less the provision for bad debts, and the provision for bad debts value for 2005. Remember, we're doing the balance sheet, so therefore we're picking up the balance sheet. The value coming from 2005 is $6,750. So you're subtracting 6,750 from the 135,000. And the result for our debtors or remaining debtors is 128,250. That is our debtors value after we have made a provision for bad debts for 2005. And the final year, which is 2006. 2006, again, we're going to pick up our debtors value for 2006. So we need to go to the question to pick up that, and we're seeing that for 2006, our debtors value is $145,000. So that's 145,000, and from that, we're going to less our provision for bad debts, which is the figure coming out of 2006 in our provisions account, which is $7,250. $7,250. That is our balance coming out of our provision for bad debts account for 2006. Now, we now need to find the difference between the 145,000, which was our debtors balance, and the 7,250, which is our provision for bad debts balance, and that gives us $137,750. So here we are now at the end of that question that we were looking at, which is 2003, question 3B, provision for doubtful debt. You are required to show the provision for bad debts account and the balance sheet extract for the 3 years. So that was balance sheet extract for the 3 years. The years were 2004, 2005, and 2006. But remember, before you work any question, you need to read the question, find out what is required, proceed to do your workings. Most provision for doubtful debt question, you have to do your workings. While doing your workings, you determine whether there is an increase or decrease, and indicate whether you're going to debit or credit your provisions account. If there is an increase, the increased value is credited to your provisions account, while your profit and loss account is debited, because this item will be charged against your expenses. It's an expense. And If there's a reduction, you would debit your provision for bad debts account while your profit and loss account is credited because this item is a revenue. So once there's a reduction in your provision for bad debts, it's reflected as a revenue in the accounting books. Do remember, you can double check if your provision for bad debts account is accurate. The figure that you get, just highlight those figures for you. So in your workings, you would have noticed that for 2004, the value there is $9,000 as your provision for bad debt. That is a balance. Coming out of 2004, based on your account, you're seeing 9,000 as your balance. All right, 9,000. For 2005, your provision for bad debts balance is 6,750. And in your provision for bad debts account, you're seeing that coming out of 2005, which is $6,750. Likewise, for 2006, your balance is 7,250 based on your calculation. And coming out of 2006, in your provision for bad debts account, you're seeing that the balance brought down is $7,250. So there you can double check if your provision for doubtful debts account is actually correct. Now for your balance sheet, remember, it's the balances. So what we're working with are the balances. You pick up your debtors balance. Why? Because provision for bad debts relate to your debtors. Without any debtors and without you actually wondering if you're going to actually be able to collect everything, you wouldn't have made a provision for bad debts. So you indicate the heading, the category for the debtors, which is current assets. Remember, your debtors is a current asset. So therefore, we indicate that because we're doing an extract. We're showing how we would treat this item in your balance sheet. You list your debtors value. This 180 came from the question. 2004, 180,000. And from that, you minus your balance of 9,000 coming out of 2004 from that. And you do the very same thing for 2005 and 2006. So there we have it. In a previous session, I looked at a question, accounting entries for provision for bad debts. Remember, the link will be in the description. And this question there wasn't any opening balance for that one. However, for this one, there was an opening balance of 7,500. So you have to indicate that you have to ensure that your account reflects this $7,500. And from there, you do your workings. The following years or periods, you ensure that you show only the increase or the decrease. So there you go. You should be able to respond to any provision for bad debts account presented to you in exam. So again, if you're wondering what is provision for bad debts, the link is in the description. And also, if you want to recall the accounting entries, yes, you can get it from this very same lesson, as well as you can follow the link, click the link in the description to take you to that lesson. All the best in your exam and in doing any provision for doubtful debts question that is presented to you.
Like, share, and don't forget to subscribe.